Well, good morning. Thank you to Oil and Gas UK for allowing me to speak today. It's a great privilege. And thank you all for coming at this unearthly hour of the morning. I have to say in London we don't normally get into the office quite at this time, but that's another issue. What I'll do is run through a little bit of our history, explain to you who we are. I guess that would have been a harder job a couple of weeks ago, but we have been in the press quite a bit recently, so I dare say a number of you know a little bit more about us now. And then just run through some of the important elements that we see have led to what we consider to be our success. And a little bit as well, like Tom, I'm going to have to give you a disclaimer, which you can read at your leisure. And then run through a little bit of the history of Nautical Petroluem. We were listed on AIM in 2005, and our focus was very much the UKCS. In fact, one of the first assets we acquired was a license in the promote round, in the 21st round, which was in fact the very first promote round, which gave us the opportunity to get involved in projects at a very low cost. And in fact, that first block actually resulted in us moving the development of Kraken forward, which is one of our key projects. We have three main projects at the moment: Catcher, Kraken and Mariner. All three are moving through to development, and FDPs will be happening this year and early next year on those three projects, which is a very exciting time, but obviously it brings a number of challenges for us. Having them all coming at the same time, it's a little bit like waiting for buses. So we have a significant exploration and appraisal portfolio in addition to these three major projects. We have over time raised £68 million from the capital markets. And we are currently in a very strong cash position. We have most of that £68 million still intact, which is a very rare occurrence. We've got in the region of about 90 million shares outstanding, fully diluted. And as was alluded to earlier, we are subject to a takeover offer, which has been approved and supported by our board from Cairn, which values the company at around about £414 million. We consider that to be a major success. Just running through our portfolio of assets, we are pretty much focused on Quadrant 9 and Quadrant 3, as you can see from the map. We've got a number of licenses there, including Kraken and Ketos and Mariner. Ketos is an exploration prospect which we hope to drill either later this year or early next year. We are also operator of a number of wells. We have operated a number of blocks and drilled 6 wells in that period of time. Some successful, mostly successful, fortunately. And a number of non-operated blocks as well. It's not just the UK North Sea that we're involved with. We are involved in blocks outside there. We have a block in the East Irish Sea. We have some blocks now in Dorset, and a number of onshore blocks in France. And we are expanding our activity to the Mediterranean area, and we hope to be making some announcements on that in the not-too-distant future. So what are our challenges? Well, as Tom mentioned earlier, cash is a very important element to a company like ourselves. A company that starts up needs that injection of equity, and equity is really the first place that you head to. And we've made a number of raisings over a period of time. The equity market is pretty fickle. It can change pretty rapidly on you. There are times when that equity market is closed to you, and it's at times like that you need to be in a position where you have the resources available to weather that particular storm. 2008, 2009 was a very interesting period for a lot of small companies, and a lot of them did not survive that period. We were fortunate we had funds available to us during that period, and we made sure that we used them wisely. And when the equity markets became a little bit more favourable, we took that opportunity and went in and raised money. Debt financing is another area, obviously, where you can find substantial sums, but for a company without cash flow, without production, it's very difficult. You may well have some very good projects to develop, but it's very difficult if you aren't already sitting on cash flow to access that debt. And debt has become a lot more difficult to access since 2008. So we aren't in that market. We haven't been in that market. We've looked at it, but we've decided that is not the way that we can move forward. So what else do we have available? Well, in our portfolio, we have a number of assets. So we do trade assets, and when we see it appropriate, we will trade those assets and generate cash through trading assets. We've also been very, very successful in farm outs, and that has been one of the main areas for us in our activity. And a lot of the work that we've carried out, although we've spent a lot of money, a lot of it has been our partners' money through farm outs. And what I will do is just run through a case study of Kraken so you can understand how that has evolved. Currently, Kraken, we have a 25% operated interest in the block. That operated interest has arisen through various things over a period of time. We will be transferring operatorship to EnQuest shortly, but at the moment we are currently the operator. The block has on it 2P reserves, and I quote the word reserves. That was a Gaffney Klein Competent Persons report of 167 million barrels, of which to us at 25% we have 42 million barrels, which is a substantial sum for a small oil company. The oil is heavy. That's one of the reasons that we're in Kraken. We have concentrated on heavy oil and focused on heavy oil. And we're glad we have, because the value of heavy oil, in fact, has increased over a period of time. I think when we first started looking at heavy oil, we were looking at 20% discounts from Brent. Well, today, most of the heavy oil that's produced in the North Sea actually trades at a premium to Brent. Things have changed. The appetite for heavy oil has improved quite significantly. But this is heavy. When Kraken comes on stream, it will be the heaviest oil produced in the UK sector of the North Sea. It is also viscous, 110 to 161 centipoise, but very good reservoir qualities, and that's very important. This differentiates us from a lot of the heavy oil activities that you see in Canada. These wells do flow, and they flow very, very well indeed. And it is a large accumulation, and it's been proved up by 4 successful wells, including 2 sidetracks. So a little bit about the history. As I said earlier, we applied for this block in the 21st round. It was a promote block, and initially we had 100% of the block. Equity was raised to finance the work program. It was a fairly low commitment work program to start off with. And we then started, once we'd carried out our initial work and de-risked it to an extent, we then started our farm-out process. We farmed out to 2 individual companies, one from Korea and one was a startup company. And eventually we found ourselves at a position after 3 successful farm-outs with an operated interest at 35%. The farm-outs ranged from a 1 in 5 to 1 through a 2 to 1 farm-out all the way up to a 7 for 1 farm-out, and in some additional cash involved in that, which meant that we de-risked Kraken at no cost to the company. So unlike some of the other companies sitting in this room, we don't have substantial losses to offset against future tax income. So it puts us at a disadvantage when it comes to buying production. So that's one of the areas that we will not be pursuing. So we now have a position where we have drilled a number of wells, and as I say, the partners have funded more of that expenditure than we've actually incurred, which is a very pleasant place to be. So 2010, following the 3rd well, which was a dry hole, it set us back. It also set the joint venture back. And the joint venture became a little bit difficult to move forward. We were very convinced about this reserve and this resource, and we wanted to move it forward. Our partners were less encouraged. So we had to revert to the JOA. I lived with a JOA on my desk for the best part of a year and a half, referring to it almost every day with every communication that I was sending, because we ended up sole risking both our partners on the 4 well. We took the risk, and the 4 well was a success. It encountered the thickest pay we'd found to date. Took the risk, paid our money for this, and as a result of doing it on a sole risk basis, we found that our partners now were even further indebted to us because of the terms of the JOA. So in 2011, the joint venture effectively was stalled. We had partners who were interested in the asset but didn't have the wherewithal to move it forward. Various negotiations went on between ourselves and the partners, and we moved our interest back from a 35% interest to a 50% interest prior to drilling the 5 well. The 5 well was our most successful well to date, and the 5Z sidetrack, which was a horizontal well, encountered a significant amount of oil, and we had a very successful flow test. So Nautical had then moved to a position of a 50% interest in that particular joint venture, but had significantly de-risked the resource, and we were going to move ahead to development. So the next question was, how would we finance that? As I mentioned earlier, we found that debt finance was going to be difficult, so we resorted to the industry. We know the industry understands these assets, and the industry are the people that will be best suited to finance it. And through a process of negotiations, we ended up in an arrangement with Enquest, who agreed to take on the operatorship and also to finance us for a development carry of $240 million US, which circumvented the requirement for any debt finance on that. They are a very good operator, and we're very pleased to have them as a partner, and as we move forward, we look forward to the success in that particular asset. What else do you need as a small company? I think you can't stress strongly enough the importance of technical expertise. And we were very fortunate to encounter an excellent technical team. Most of our activity is outsourced, it has to be said. But we do outsource to people on a permanent sort of basis. It's not pick and choose from time to time. We decided that it was important to understand the areas that we were exploring. We needed to build from a regional understanding, and that was important. And we also needed to maintain focus. So whoever we took on was going to be involved in the project all the way through. So it was going to be a long-term commitment from us and a long-term commitment from our technical provider. The technical provider is a team called Merlin, who work down in the West Country, very pleasant location. They like being down there. They like the challenge of the work that we present to them, and we've built up a superb relationship. And as a result of that, we've seen some fantastic technical results. There's also the requirement of access to technology. Although we're a small company, because we have a very good technical team, we know that they are constantly looking at the new developments that are taking place in our industry. And there are a number of very important new developments taking place, especially in the seismic field. And we encourage our technical team to expose themselves to new opportunities and new developments in that field. So we do use cutting-edge technology. We have been working with PGS with their GeoStreamer survey, and we've just got results from that, and that's looking extremely exciting. Statoil are using new technologies as well on seismic, and that we hope will enable us to image some of the more difficult parts of the reservoir that we're looking at on Mariner. When I say cutting-edge technology, there's some technology that's so secret we can't even tell you about it. On our last well, we had our technical team working on the horizontal section, and they were using a technology to understand exactly where they were in the reservoir and to understand the reservoir as we were going through it. And our head of subsurface that was involved in that has got 30 years of experience, and he told me that it was the highlight of his technical career. So hopefully, in the not-too-distant future, you will find out about that technology and understand how important it is to move things forward. But we could access that, and that really is based on our technical team and their understanding of what is available and what is important. And lastly, government. Small companies, I think, believe that they're outside of the government sphere, but it is a very important thing to have a voice with government. Small cap companies live and die by some of the decisions that government makes, so it is important that you have a voice and you can influence government. If you don't have that voice and you aren't aware of what is going on, you may wake up one morning and find a headline in the newspaper which could actually be a situation where the company goes under. So it is very important that you have that voice and that you engage with government wherever possible. The relationship with government is very important, and many of the new developments that you see in the North Sea in the UK sector today have actually resulted from small companies acting early on opportunities. There's ourselves with Kraken and Encore, who recently were purchased by Premier. They have developed the understanding of the Catcher block, which has led to a number of successful discoveries. That was a block that was undrilled until taken on by Encore. And again, a company that was encouraged to enter the North Sea by the government's promote round. So it is very important. Very important that new companies are encouraged to come to the North Sea. Very important that they are encouraged to stay in the North Sea. And I think government should be aware of that. And I think government should be patted on the back for the initiatives that they have taken over recent years to encourage these companies to come on board. So there's very little else to say about us as a company. As I said earlier, we are in the process of a potential sale, and I can't really talk too much about that. We have had a very exciting time, and we hope that we'll still continue in the North Sea in one role or other. But it is all about managing risk. It's all about making sure you never run out of money, because that's how you shred value. But managing risk is very important. Very important. There are a number of things that need to be addressed as far as small companies are concerned. And I was reminded last evening by Malcolm when we were talking about risk that if a company doesn't take notice of these things, then they will go under. And a very close friend of mine who's a statistician, whenever he travels on an aircraft, always travels with a bomb in his bag. And the rationale for this is that he will tell you that statistically it's very, very remote that there will be 2 bombs on that plane. Thank you.